How should entrepreneurs, founders and CEO think about IPO? Listen to Narayana Murthy's priceless perspectives.
The message that you would like to leave founders and entrepreneurs at this point in time as they look at when to IPO, with how much to IPO, and what and how much to put on the table and how much to take off?
The philosophy that we used at Infosys was, the day you take 1 paisa from an outsider who is not part of your group, we were 7 people. The day we took 1 paisa from the 8th person outside, the ball game changes. Because he or she is not part of the daily deliberations. He or she has no time to get into every detail. He or she has trusted us with his or her money. Therefore, I said that ball game changes. So you have to operate like the trustees of the outsider's money. Let me tell you our own experience when we were raising funds from family and friends. We raised approximately about 60 lakhs from family and friends. And I did about 65%, Nandan did about 35%, others didn't participate in that. But whenever we went to my so-called well-to-do friend, they would say, will you guarantee me this return, explain this thing, show me the model, this, that, etc. On the other hand, when I went to my sisters, my friends who were not that, well-educated, that well-informed, they would say, are you certain that you will use this money carefully? Are you certain that you will not spend this money recklessly? And I would say, look, we will treat it as better than our own money. And it was the lower middle class, friends of mine, relatives of mine who contributed this money. So the day before we went public, I sat down with all my colleagues and said, folks, we cannot sleep well until we redeem our pledge to these people. And, we had wonderful people. I mean, at that time, Mohan had still not joined us, but there was G.R. Naik, there was Nandan, there were other people who had done an excellent job. Nandan had done a very good job of forecasting the revenue. And G.R. Naik grilled him. He was an old school person. And at the end he said, okay, I agree. And, the reality was we exceeded our own projections by, I think, a factor of 2. If I'm not wrong, but I may be wrong. Let me tell you that until those 3 years got over, because then only I could breathe properly. Because at the end of the day, stock market is like a treadmill. I don't know of anybody who goes and says, I will invest in this stock for it to go down. I don't know anybody. Even if the PE is 1500, which some of the companies have today, that person is expecting either the earnings to go up, even if the PE may not go up, even if the PE comes down, earnings to go up, or the PE to go up. In other words, he or she is expecting the stock price to go up. Nobody invests for health. So therefore, I would say that having an IPO is not fun. Is not to say I'm worth this many $1 billion. That's all bullshit. Because this is all illusory. This is all illusory. I've seen so many people who went up, who came down, all of that. So best thing is to be very, very practical about these issues. Think of the poorest retail investors. As Mahatma Gandhi used to say, when you take this decision, think of the poorest person and the impact of your decision on that person. So therefore, I would request all the wonderful people assembled here to think of the poorest retail investor before you decide on the IPO, because you owe that person, you owe a tremendous responsibility to redeem your pledge. That's what I would say.
Taking a company public through an initial public offering, IPO, is a significant milestone for any founder. It represents a crucial decision that can have far-reaching implications for the future of the business. Before embarking on this path, founders must carefully consider their responsibilities to ensure the best interests of the company, its employees, and its stakeholders. This essay will explore the key responsibilities of a founder before deciding for an IPO. Fiduciary duty. Founders have a fiduciary duty to act in the best interests of the company and its shareholders. This duty requires them to make informed and prudent decisions, taking into account the long-term sustainability and profitability of the business. Before pursuing an IPO, founders must assess whether it aligns with the company's strategic goals and whether it will create value for existing shareholders. Financial readiness. Preparing a company for an IPO involves rigorous financial scrutiny. Founders must ensure that their financial systems are robust, accurate, and transparent. They need to have a clear understanding of the company's financial position, including revenue streams, profitability, cash flow, and debt obligations. Additionally, founders should engage reputable auditors and advisors to conduct thorough due diligence and financial audits to provide confidence to potential investors. Governance and compliance. Going public requires a higher level of corporate governance and compliance with regulations. Founders must establish strong governance structures, including an independent board of directors and audit committees. They need to develop and implement effective internal controls, risk management frameworks, and compliance programs. Founders should also be prepared to meet the regulatory requirements imposed by the securities exchange and regulatory bodies. Transparency and communication. Transparency is crucial when a company goes public. Founders have a responsibility to provide accurate and timely information to shareholders, potential investors, and the general public. They should establish effective communication channels and disclose all material information regarding the company's operations, financial performance, risks, and future prospects. Open and honest communication builds trust and enhances the reputation of the company. Employee considerations. Founders must carefully consider the impact of an IPO on their employees. Going public can bring significant changes to the company's culture, compensation structure, and work environment. Founders should communicate openly with employees about the reasons for pursuing an IPO, the potential benefits, and any anticipated changes. They should also establish mechanisms to incentivize and retain key talent, ensuring that the company remains attractive to employees during and after the IPO process. Long-term strategy. Before deciding on an IPO, founders must evaluate the long-term strategy of the company. They need to consider whether going public aligns with their vision and goals for the business. Founders should assess the potential impact on the company's ability to innovate, make strategic decisions, and maintain a competitive advantage. They should also evaluate the readiness of their products or services, market conditions, and industry trends to determine if it is the right time for an IPO. Investor relations. Once a company goes public, founders become stewards of the interests of their new shareholders. They must establish strong investor relations practices, including regular communication, timely reporting, and engagement with analysts and institutional investors. Founders should be prepared to manage expectations, provide accurate financial guidance, and address investor concerns. Cultivating positive relationships with shareholders is essential for the long-term success of the company. Post-IPO transition. Founders need to plan for the post-IPO transition carefully. They should define their role within the company and determine how their responsibilities will evolve after going public. Founders may need to delegate certain operational tasks and focus more on strategic leadership. They should also be prepared to adapt to the increased scrutiny and accountability that come with being a public company. In conclusion, the decision to take a company public through an IPO is a pivotal moment for founders. Before embarking on this path, they must recognize and fulfill their responsibilities to ensure the best interests of the company, its shareholders, and its stakeholders. By fulfilling these responsibilities, founders can navigate the IPO process successfully and position their companies for sustainable growth in the public markets.